Price relative, an indicator that compares the performance of one security against that of another by plotting the two as a ratio. For example, Google can be compared to the S&P 500 with a ratio of the prices, Google S&P 500. Google is outperforming when the ratio rises and underperforming when the ratio falls. Price-earnings ratio. The PE ratio is figured by dividing the price of a stock by the company earnings per share. For example, a stock selling at $50 with earnings at $5 per share for the previous year has a PE ratio of 10, 55, and 810. This value is also called the multiple. Proxy, a security or index whose correlation with another security or index is so strong that it is used as a substitute for the other. For example, General Electric has a very high correlation to the performance of the S&P 500. Put option, the right to sell a stock or commodity future at a given price before a given date. The owner of the put option is speculating that the price of the stock will go down and is therefore bearish. Put-call ratio. Based on CBOE statistics, the put-call ratio equals the total number of puts divided by the total number of calls. When more puts are traded than calls, the ratio will exceed 1. As an indicator, the put-call ratio is used to measure market sentiment. When the ratio gets too low, it indicates that call volume is high relative to put volume, and the market may be overly bullish or complacent. Range. The distance between the high price and the low price for a given time period. For example, the daily range is equal to the day's high minus the same day's low. Reaction rally. After a decline, an advance that does not surpass the high from which the decline began is known as a reaction rally. Rectangle. A continuation chart pattern where prices move sideways between two different levels for a period of time and then continue moving in the direction of the previous trend. Relative Strength Index, RSI. RSI is plotted on a vertical scale from 0 to 100. Values above 70 are considered overbought, and values below 30, oversold. When prices are over 70 or below 30 and diverge from price action, a warning is given of a possible trend reversal. Relative Volume, RVOL. Relative volume compares volume data for each price bar, with the average volume over a specified number of prior bars. The RVOL ratio produced allows chartists to easily spot setups where unusually high or low volume is powering a price move. When the indicator value is greater than 1, the volume is higher than average. Conversely, a value less than 1 means lower than average volume. Resistance. Resistance is a price level at which there is a large enough supply of a stock available to cause a halt in an upward trend and turn the trend down. Resistance levels indicate the price at which most investors feel that prices will move lower. Retracement. A decline that retraces a portion of a previous advance, or an advance that retraces a portion of a previous decline. Retracements typically cover 1/3 to 2/3 of the previous move. A retracement of more than 2/3 typically signals a trend reversal. Reverse stock split. A stock split which reduces the number of outstanding shares and increases the per-share price proportionately. Reward to risk ratio. A calculation equal to the potential reward divided by the potential risk of a position. A long position entered at 100 with potential reward estimated at 120 and potential risk of 90 would have a reward to risk ratio of 20-10 or 2-1. Generally, a higher reward to risk ratio is a more appealing trade. Rising wedge. A bearish pattern that begins wide at the bottom and contracts as prices move higher toward a support break. Runaway gap. A price gap that usually occurs around the middle point of an important market trend. For that reason, it is also called a measuring or continuation gap. Sentiment indicators. Psychological indicators that attempt to measure the degree of bullishness or bearishness in a market. These are contrary indicators and are used in much the same fashion as overbought or oversold oscillators. Their greatest value is when they reach upper or lower extremes. Shakeout. A situation where many scared investors exit their positions due to unfavorable news or uncertainty regarding the stock or industry. The dot-com bust was characterized by numerous shakeouts, causing many to abandon their dot-com positions, often at great losses. Shooting star. A single-day pattern that can appear in an uptrend. It opens higher, trades much higher, then closes near its open. It looks just like the inverted hammer. However, it is bearish rather than bullish. Short selling. The process of selling a stock with the hope of buying it back at a lower price. Sell high, buy low. Short sellers are bearish and believe the price will decline. Short selling involves borrowing stock, usually from the broker, to sell short and using margin to finance the borrowing. If the price of the stock in question advances too far, the short seller will receive a margin call and be required to put up more money. Simple moving average. A moving average that gives equal weight to each day's price data. Spinning top. Candlestick lines that have small bodies with upper and lower shadows that exceed the length of the body. Spinning tops signal indecision. Split, the division of a stock into multiple shares. In a 2-for-1 split, the stockholder's shares will double in quantity, though the value of each stock will be halved. A stock split is usually an attempt to make high stock prices seem more attractive to investors, and generally occurs in the face of new high